Hi everyone, this is Andrew, your host, and I will be taking you on the breakdown of the business news that happened this week. So let's jump into the start with Nvidia, which is a company that we had spoken about in previous weeks. If you want, you can check out the video. But basically, they had purchased a company in Europe called ARM. And now they're going even further into Europe, and in Cambridge in England, they're building a supercomputer that is going to cost them 40 million pounds, which is the equivalent to about $53 million. And this supercomputer is actually going to be using artificial intelligence to do research into healthcare. So this is kind of a new concept of using artificial intelligence in ways that we can kind of increase our knowledge in the health field. So they're trying to make some kind of revolutionary breakthroughs with this. And you can see Nvidia, again, is doing a big decision in Europe here with a lot of money being piled behind it to make some things happen for them. Next up, we have Caterpillar. So Caterpillar, also staying in Europe here, they purchased Scottish Weir Group's oil and gas assets, and they did it for $405 million. So once again, there's a lot of money being thrown around here. The transaction, it gives them about 2,000 employees and 40 different services and manufacturing locations for oil and gas operations from the Scottish Weir Group. So it's another company that's going into Europe. Then, we'll do one more topic here for Europe for the time being. We have Switzerland making some changes, in particular the city of Geneva in Switzerland. They decided to pass a minimum wage law to give each worker in Geneva 23 francs an hour as their minimum wage. So that equals about $25 an hour. And if you take that over the course of a week, in Switzerland, the average work week is about 41 hours. And that would be $4,100 United States. So you're looking at, that's a pretty significant minimum wage that they're enacting in that territory. They had tried to do this back in 2011 and 2014, but both times it was voted down. And part of that is because the research on the effectiveness of a minimum wage to kind of raise the economic standard in the area is a bit questionable. When you raise the wage past what employers are willing to pay for a position, you can only be paid for your productivity that you provide to the company. So once you get past that point, people are not going to hire people to do a task where they're losing money on it. They're not getting more value out of the production of that worker than they get for the business, right? So that's, in grocery lines now, you don't have people bagging groceries as much. You don't even have people at the cashier's registers anymore at the grocery stores. So a lot of times you have self-checkout. And you see this type of stuff happening in different areas. Here, it was passed because it was actually passed by a 2/3 vote because of the pandemic that was going on. It kind of changed the mentality for a lot of people, and there's a lot of people that are suffering through this. So looking at some other areas around this, if you look at the Mercer's 2020 Global Cost of Living Survey, the top 10, we're just looking at the top 10, and Geneva, the city of Geneva in Switzerland, is number 9 on that list. And they've actually jumped up. I think they were number 13 before this. So now you can see that the cost of living in Geneva is already pretty high, but it's not just Geneva. It's like all of Switzerland. So if you've ever been to Switzerland, you know that just the cost of buying anything there, whether it's food or clothing or a souvenir or anything, it's very expensive. They have a high cost of living in that country. Actually, on the top 10 list, they actually have cities. They have 3 cities on the top 10 highest costs of living that are all in Switzerland. So you can see that this is something that's kind of just a situation in that area there. And if you look at other countries that don't have a federal minimum wage, it was actually Switzerland doesn't have a federal, it just has it in the city now in Geneva where it was passed. But if you look at Denmark and Sweden and Singapore and Norway and Iceland, those are all countries that you would consider kind of a westernized or just a mature economy, and they don't have the minimum wage, and they are doing pretty well, it looks like. So it's going to be interesting to see how this affects, in particular, this one area in Geneva. So looking again at like that cost difference, if you look at the Big Mac index, which is a fun kind of tool to look at, where it was made by The Economist magazine, I believe, to show differences between currencies with the US dollar and which ones were too expensive and which ones were inexpensive against the US dollar. And if you look at the price of the Big Mac in Switzerland, it is $6.63. Okay, but if you look at it in the United States, it's $5.71 on average. So that's actually a 16% difference. So that indicates that in Switzerland, it's costing like way more than it should for that same Big Mac that you can get in many places around the world. So I just thought that was another interesting thing, an aspect of this to show the cost of living difference there. Okay, now moving on to the next item. We actually have a kind of a record in the New York Stock Exchange market and the NASDAQ. There are now more ETFs than individual stocks traded on those exchanges. And you think, how is this even possible, right? Because an ETF, an exchange traded fund, is basically a collection, a basket of a whole bunch of different individual stocks. But these have just exploded in popularity in the past, 10 years or so. And what's happened now is you have all these different ETFs. You have some for the index, for the S&P 500 or the Dow Jones Industrial Average, Russell 2000, 3000. You have those. But then you also have it for different industries. So you'll have the tech industry will have one, the mining industry will have one. You have all different kinds of ETFs, and it's become so big now, it's actually bigger than individual stocks. So I thought that was an interesting thing to point out, how the times are changing kind of thing. Now, if we're looking at individual stocks, we should look at Regeneron, which the President of the United States actually, after he contracted COVID-19, which we spoke about in the last episode, he started taking an antibody cocktail from Regeneron. And Regeneron is this biopharmaceutical company that makes kind of these breakthrough kind of drugs that can do a lot of kind of crazy stuff, and a lot of it's experimental, which this one is not FDA approved yet. But just on the news that you had the president, who should technically be receiving the best care he can possibly get, taking their antibody cocktail, the stock jumped on the news. So it started out at around like $564.80. And then by the end of the week, it was up to $602.07, $602. So it went up about 6.5% just on this news that the president was using this antibody cocktail. So it's interesting to see now, is this just going to be going up on the news? Or is it that maybe this will show that it's successful if it works? If it ends up doing a good job here, maybe that's a future product for them that will do very well. All right, so that's enough about Regeneron. So now I want to just go into the status for the overall United States economy, right? We're still on these like different types of lockdowns in different areas. Some people can go to restaurants at 25% capacity, some can't. There's all these different things going on, but one industry that is just getting obliterated is the movie industry, the cinemas, the movie theaters. You can't go to a movie theater when you're scared the person next to you has COVID-19. So what has happened actually is, I think that the company Cineworld is actually an owner of Regal movie theaters in the United States. And they've decided that they're going to close 500 of their, temporarily closed, they said, but it might be indefinitely here. They're going to close 500 movie theaters across the United States and 127 in the UK. And the thing with this is, the CEO of the company came out and he basically said, we're like a grocery store that has no groceries to sell. There's no movies coming out that can go into the movie theater and drive people to take that risk and also pay up for those expensive tickets for the movie theater. So going into that, you had a movie called Tenet that was released just recently. And when it was in the box office, it only made $45 million. So that's a big problem. When you had these movies in the past, you had like the Avengers movies and the Infinity War and Endgame making $200, $300 million, and it was no problem. Now, this movie made $45 million. The last film that the director made was Dunkirk. That one made $169 million in the box office. So a lot of these kind of big productions need to recoup their cost of creating the movie in the movie theater when it has that high ticket price. If you're getting it on Netflix or Hulu or Amazon Prime or Apple TV or Disney Plus or any of those things, it's going to be a lot cheaper for the company. They don't get that high ticket price, and that's what they need to really make their money back, right? Another thing now, well, you have about a $200 million budget for your tentpole franchise. Now you have to factor in some insurance costs for COVID-19, shutting down production. What happens if you're not able to release it? So a lot of these companies would have to pay, on top of their $200 million production, pay for the insurance, and then on top of that, hope they're able to release and actually come up with a very good box office result. And it's just becoming too expensive. And you're going to see a dearth of movies now that there's not going to be anything coming out for a while because all these productions are being halted. And if you look at kind of what the CEO there was saying, there's actually been 9 movies that have been pushed from their original release date in 2020 to sometime in the future. So that was like Fall Guy, the James Bond movie. There was the Batman was coming out and they pushed that one back. And also the Dune movie, they're making a Dune remake that was supposed to come out that got pushed back. And those are all major productions. All these kind of tentpole productions that the studios rely on to make their big money back, they're being pushed back. So we're going to have to see what happens after this pandemic if we're ever going to have the same kind of movie industry like we had before. Okay, and then we had an announcement from the electric vehicle maker Tesla. So they actually produced 139,300 vehicles during the course of September. So that's pretty good. It's actually higher than their expectation, which was about 130,700. And with that, if they get to their goal now of 500,000 electric vehicles for the year, that would be a 36% increase from the amount of vehicles produced last year. And originally they were saying that they're on track to be able to meet this goal. So, I mean, it was good news in the sense they beat their numbers, but it wasn't a blowout number. And I guess shares were actually down originally after the news, right? There was nothing special that came out of it. But a lot of that was because shares in Tesla have been going crazy this year and I think it's quintupled since the beginning of the year. They had their stock split and everything. So it makes sense that there's a bit of a sell-off here, right? It's like any news that's not kind of extraordinary is not going to be able to drive the stock up any further. And a big thing that I thought was interesting with this is that you're looking at electric vehicles, a lot of them are very expensive. There were 124,100 of the Model 3 and the Model Y that were sold by Tesla in that quarter, right? But then the higher end models, the Model S and the Model X, they only sold 15,200 of those units. So you can see here, everybody's going on the lower end of the spectrum for the cheaper cars because they can't really afford these $100,000 Model X and Model S's. So I thought that was an interesting point of this. Another thing is that the CEO, Elon Musk, said that he also wants to go into India, which is a pretty big market for them to go into. The company is expected to build 20 million cars annually within the next decade. So that's kind of crazy when you think about them saying that, kind of stating that that's going to be a reality, because you look at a company like Ford and GM, I mean, they make between maybe 12 and 14 million cars a year in a good year. And these guys want to do 20 million a year in the future, kind of blow out the old car companies. That's a crazy goal that they want there. So that's enough about the car company though. Let's go over to a new one. Let's go into corporate debt markets in the United States and what's going on here. We've seen some interesting things going on right here. $1.4 trillion of corporate debt has been issued in 2020. All right, so what does that mean? Because it just sounds like a really big number, right? So that actually is that more companies sold debt in the third quarter of 2020 than ever before. That's significant. And the interesting thing with this is that, like, why are all these companies issuing debt? Well, for one, we had the pandemic, we had the interest rates by the Federal Reserve being cut to nothing, basically. And you can have companies getting money on these corporate debt markets and issue very low interest rates. They're paying out very low amounts to be able to obtain this capital. And on top of that, I think this one's very interesting. The Federal Reserve announced this year that they're going to start buying corporate bonds. Interesting how all these companies are issuing all this debt when the Federal Reserve, basically the bank with the deepest pockets in existence, announced that they were just going to go and buy as much corporate debt as they needed to kind of bring the economy back into shape. So you're seeing how that can kind of warp the markets into different ways and the different things that are happening because of the pandemic, because of the reaction from the Federal Reserve, because of everything that's happening around debt, money, and companies trying to stay in existence and have enough capital to get to the next year. Next up, we have another, I was going to say merger, but it's actually an acquisition. So the acquisition of Myocardia by BristolMyers was $13.1 billion. And BristolMyers is buying this because it's a heart treatment biotech company. And this is just another kind of general merger that we're seeing in the big billion-dollar range here. So it's good to see all these mergers and acquisitions, a lot of stuff going on in business. As a side note, with businesses, they're trying to kind of work around the pandemic and everything, and then you see the CDC actually just updated their guidance on the masks and social distancing, and you look at social distancing. Originally, they said 6 feet is far enough away where you're not going to get contaminated by the virus, you're going to be okay. A lot of restaurants opened based on that principle. Now there's kind of saying, you know what, 6 feet might not be enough. If you're within 6 feet, but you're in a closed environment, you might still get sick. And of course, now it just brings the uncertainty up, which is the big problem for businesses. As a business, the thing you hate is uncertainty. And when you have them changing the rules from kind of the head scientists and everybody in the CDC, the Center for Disease Control, where you're supposed to getting the most kind of accurate information from them, it kind of throws a wrench into people's plans on what they're trying to do. And then they have to kind of rework what their next options are going to be. So now let's go into the trade deficit for the United States. So you'd think that there's this pandemic going on, people might be cutting back a little bit during this time, right? I mean, there's a lot of people getting laid off and everything. So think about it, like what have you purchased in the past, 5 months or so? Like what have you been purchasing? And then the second question to that would be like, were any of those items that you purchased manufactured in the United States, or were they manufactured overseas somewhere? So that's the interesting thing, because if you look at as an aggregate of the whole economy, the US had its worst monthly trade deficit in over a decade in August. And it was at $67.1 billion, and that data just came out. And it's pretty crazy that it seems like, okay, people are getting money. There's a lot of influx of money from their stimulus going on. There's a lot of people that have money and they're stuck at home and they can't spend it on the regular things. And you know what? Instead of buying what they were normally buying, now they're buying a lot of products made overseas. So I just thought that was very interesting how you're seeing that trend change the kind of the landscape and the trade deficit for the United States. Okay, so now let's go into a government report here. The House Antitrust Committee issued a 449-page report. That's like, I mean, if that was a book, that'd be a pretty long book, right? 449-page report. And they did it on Facebook, Amazon, Apple, and Google. And they're kind of investigating these big tech companies, and they wanted to find out, are these like the robber barons that they say happened in the past where, there's these big monopolies and they need to be broken up because they're detrimental to end consumers? Or are they a net positive for consumers and for the economy? So in the end of the report, they basically said these companies stifle competition, leading to fewer choices for consumers and higher costs, right? So it's something that these companies, we've seen them go before Congress and try and talk to Congress about like their roles in the economy and what their policies are. And now you're seeing that, I mean, if you write a giant report like this, which says that they don't want to break up the companies, but then if you read through all the text, it's basically like they should break up all these parts of the companies and make them separate. It's kind of like the Sherman Antitrust Act, where you have the companies like Belcor in the past that they would get broken up into the baby bells, and you have like the AT&T is one of the leftovers from that. And it just kind of changed the environment. And to put it simply, this is the way that the Representative David Cicilline, if I said his name right there, I'm sorry, I don't know. So he said, to put it simply, companies that were once scrappy, underdog startups that challenged the status quo have become the kinds of monopolies we last saw in the era of oil barons and railroad tycoons. So those are some pretty strong words right there. And if I'm a company and I'm hearing that, I'm getting my defenses up because something's coming at you. They also said in the statements on the report, although these firms have delivered clear benefits to society, the dominance of Amazon, Apple, Facebook, and Google has come at a price. So there's a lot of stuff in those reports. They're going to go through them. And eventually we're going to see, are they going to go after these companies and try and break them up? And you're going to have to see spin-offs of different business areas. Going with another kind of issue with the government here and what was going on with the PPP Loan Forgiveness, right? So a bunch of these Paycheck Protection Program loans were given out to small businesses in the United States, or what was supposed to be a small business. And the idea was that they would pay them back once they got back on solid footing. Well, last month it found out that 57 defendants from the Department of Justice that they were investigating attempted to steal more than $175 million from the Paycheck Protection Program. So you're seeing, and this is just what they caught here, you're seeing a lot of fraud being involved with these types of programs and very little oversight on what's actually going on and who's getting the money and how it's being used. Originally, the idea was like they would give the loan and it would be paid back, but then they said now they're going to forgive the loans. And it was in total of $525 billion of pandemic relief that was given out. Now, the problem with it, if the loans can be forgiven, if the business doesn't have to pay back that loan, then it's on the American taxpayer to end up taking the cost burden of all those kind of investments in those companies that went sour. So let's go on past that. Now I want to hear some good news, right? So here's some good news. Lowe's, the company that had been known, Home Depot got in a lot of trouble in the past because they weren't treating their workers well, and they started hiring people just on the lowest wage rather than getting people with expertise that could help customers. Lowe's kind of took a different approach from that. Now you're seeing Lowe's come out and they announced that they're going to provide an additional $100 million in discretionary bonuses to recognize frontline hourly associates for their continued service and support of Lowe's communities. So right there, you actually have a company that's, nobody mandated that they do this. They went on their own and decided, we're going to go and try and make things better for our workers by doing this kind of $100 million discretionary bonus system. And then one last government thing we have is in the United Kingdom. The United Kingdom actually went and banned all derivative trading on cryptocurrencies for individual investors. So if you're just your average Joe, your retail investor, and you're trying to go and do the derivatives trade on, say, Bitcoin like you can do in the United States. We recently had that on the Chicago Mercantile Exchange. You have derivatives on Bitcoin. Well, you can't do that in the UK any longer. And it's kind of interesting because it's like basically they're trying to protect people from themselves. Their reasoning is that, this market is too volatile and people can't handle it and they're going to lose money and be upset. But, isn't that the whole idea of an investor, is analyzing risk and making a decision based on that, on your risk tolerance? So that was something that came out of the UK there that was interesting. On Wednesday of this week, we actually had the Dow up 500 points. And the interesting thing with this is that led the Dow Transports to hit a record close. And remember, in a normal, good economy, the Dow Transports is usually hitting records. It's usually at or near all-time highs. That's a sign that the economy is still buzzing. Of course, the pandemic is kind of altering the situation a bit where everybody's shipping packages back and forth around the country. So the transports have been going up on that. But still, that's a good sign to see that. The other thing was that the S&P 500 actually formed an inverse head and shoulders pattern. So the head and shoulders pattern, it's usually, how can I explain this in an easier way? It's basically, it's showing that it kind of a end to this selling. And that from that area it would start trending upward from that point. So it's like basically showing a reversal in a downtrend, right? You have that inverse head and shoulders pattern, and then it should start trending upward after that. So that was something that was a significant action that happened in the charts of the S&P 500. Now let's go to some interesting new companies that are coming out there. We had space cargo company that was called Momentus Inc., and they're actually going to become publicly listed, but not because they're having a normal, a standard IPO. They're actually merging with Stable Road Acquisition, which is already traded on the NASDAQ, which is, NASDAQ's higher on technology companies. Now, Momentus, what they do is basically they launch, like if you're launching a satellite or something like that, they have the service available to deliver those type of packages into space. And they're used by companies like SpaceX and Blue Origin and Lockheed Martin and NASA. All of them utilize companies like this. The thing is, Momentus is going to be the first one that's going to be publicly traded. And now they're saying that this is going to be around an enterprise value of $1.2 billion. Pretty significant. The funny thing is they still haven't actually launched a mission yet. Their first launch, which is called their Vigoride, which is their service vehicle, transport and service vehicle Vigoride, is going to deliver small satellites up to 750 kilograms or 1,650 pounds into orbit. It was supposed to happen in December 2020. We're going to see if that actually happens. It's going to be the first ones with commercial customers here. So they have yet to actually launch the satellites into orbit, but it's very significant because people want to get into this sector. Next up, they also have a Fervoride, which is another one of their vehicles that they're going to launch, and it's going to be, because of the new rocket technologies that we have from Blue Origin and SpaceX, it's going to be a larger load capacity on those. So it's pretty crazy what's going on in this industry. I mean, you never, 10 years ago, 5 years ago even, you never really heard anything about rockets and satellites and space cargo and mining asteroids or anything like that. And there's a lot of people talking about this stuff now, going to Mars. Like, there's a lot of information going on. There's a lot of innovation in that industry. So the global space economy is actually expected to more than triple to $1.4 trillion by 2030. And right now it's about $415 billion. So if you have that much growth in an industry, then naturally you're going to have people wanting to invest in these companies that are kind of trying to do the breakthrough at the start and get in early on these big potential companies. On a side note with that, SpaceX also won a contract with the Pentagon for $149 million. And it was to do part of a program for an early warning system for missile defense. Now, in the past, you used to have missiles that would be like the ICBMs and the nuclear missiles. They would shoot up into the atmosphere and they go, right? And they'd blow up, but they'd be going up high into the atmosphere and come down. Then, now you have these hypersonic missiles, which actually travel at Mach 5 and go so fast that they don't have to go up into the upper atmosphere. They go right around the edge of the Earth and hit their target. And the problem is, you have the radar capabilities going like this. It goes out from the Earth like that, right? So if you have this V, when a missile's coming from up top, okay, they can see that. It can detect it early. But a hypersonic missile is so low to the ground, it doesn't get to that shape, where the radar is sticking up until it gets very close by. And that missile's traveling at Mach 5. So it would bring the response time down to like nothing and actually hit its target. So you see the Pentagon's trying to go into other kind of ways of defending against these new type of missiles that are out there. All right, so enough about that stuff. Now let's go over to something that is, a lot of people are using this now. It's called the Robinhood app for your iPhone or your Samsung phone or your Google Android, right? So what happens is all these people are using the Robinhood app, as a lot of people on YouTube and other platforms that are promoting it as well. And it's great for people that are new to investing. They don't want to know like all the details. They want to do all the charting and all the experience in working with a broker or a investment advisor. They kind of just want to go in there and trade and see how it is and see how it works. And people have been using that to the point where now they're estimated to have about 15 million registered users. So this company is actually growing 5 times faster than the other brokerage apps that are on your phone. So once again, here you see a company that's taking advantage of the new platform and leaving the old brokerage houses and apps in the dust, right? Nobody's using their desktop to do these trades anymore. People are now doing it on their phone. So, of course, there's some good and bad that can happen with this, right? Well, it's a kind of, Robinhood is a bit of a startup company here, and they do things a little differently. The way their money is insured here is a little different. The way that they have reporting on if there's an issue is a little different. And that jumped into the spotlight because a handful of users really said that their accounts were hacked and their funds that were in there, they sold all their shares of stock and took all the funds and transferred it out. And the person lost access to their Robinhood app. And there's no phone number, there's no emergency contact, there's no advisor that they can call up on the line and be like, explaining what happened here and how their money is getting drained out of their account. And instead, they had to sit there and watch it disappear. So this was going on for a little bit, and there was some stuff on Reddit and everything where it got a little bit bigger. And the company finally responded and said that it wasn't the Robinhood app itself that was hacked. It was the people's emails that got hacked and then compromised the Robinhood app or their access to it at least. So even if that is the case, it's still kind of interesting how you see these big companies like even, like Google and other ones and Apple are like these big companies, they don't have a simple way where you can just call up, get somebody on the phone, and kind of explain your problem and get a resolution on it. There's a lot of online forums and automatic replies that don't really get you anywhere. And in the meantime, people here watch their money drop out of their account. So that's just something to be aware of, and always be aware of clicking on links in emails that can lead you to a malicious site, because that's apparently what happened here. So now looking at the unemployment numbers, we had another 840,000 people filed for unemployment last week. It's kind of the same thing going on. 820,000 were expected. We're still hovering at this over 800,000 level every week. The big thing I saw with this is that 11.4 million jobs have been replaced from the 22 million jobs that were lost in March and April due to the pandemic. So that's, just March and April, we lost 22 million, only got 11.4 million back. We still have a long way to go to get these jobs back, and we're still losing jobs right now. Now, this has had an effect not just in the United States, but on the global economy and every individual in the world. This, after all, this pandemic is global. So the global extreme poverty level, that was trending down for a long time. And if you look at a chart, even in the past decade, from 2010 till now, it was trending down every year, which is a great thing. The global poverty level is listed as if you're making less than $1.90 a day. If you're living on that, then that's the extreme poverty level. What happened with this is that when the pandemic came out, it finally ticked up the level again. And now we're between 88 million to 114 million people in the world that are now considered to be in extreme poverty. So that is about back to 2016 levels. So it wiped out 4 years of progress just in this past year. So that's pretty crazy to see that. Next up, we have Citigroup, which was fined $400 million by federal authorities. And it was a problem with their risk management controls. The SEC came in and said, there's significant ongoing deficiencies that have to be resolved. And they fined them for that because they've been going on for so long. So last time we talked about JP Morgan, how they paid those $900+ million fine. Now you have Citigroup paying a fine as well. These are huge fines that are being paid out. Then if we look at Morgan Stanley, another kind of investment bank company, they're buying Eaton Vance Corp for $7 million. So it's not that much money that they're spending on that if you look at some of these other deals that we've been talking about. But still, this is significant for Morgan Stanley. Morgan Stanley actually is basically they have a brokerage, I guess you'd say a brokerage arm to their company. And they had purchased E-Trade Financial. You're seeing a lot of consolidation in the online brokerage market, and apps like Webull and Robinhood are ones that are at the forefront of that and pushing that, right? You had TD Ameritrade and Charles Schwab. They merged, and then you had E-Trade now and Morgan Stanley. They just did that for $11 billion, and it was just kind of done. When you bring in another company into the fold kind of thing, it ends up being a lot of cultural differences that have to be worked out. It takes a little time to get a good understanding and to get the business going back to what it was. Morgan Stanley's not waiting at all. They just bought another company. And what you can see is they're getting away from their risky trading habits that used to be a big source of revenue in the past and a source of profits. Now it's not as much. They're more focusing on personal wealth and asset management, helping individuals. And it seems to be like their main goal here. They just bought 2 companies to try and do that. And for the last item here, we have IBM, one of the tech giants of old. A 109-year-old company is actually splitting their company into 2 different business units. So the original idea here was that a lot of people are going to the cloud infrastructure now. And IBM has this large business that is it's actually $19 billion in sales for infrastructure services, where they basically have their IT representatives go to your company and manage your data centers and your other items that you have for IT. The problem is with all these companies going to the cloud, they no longer are doing their own data centers. They're relying on Amazon and Microsoft and these other companies to do that, and Google. And now IBM has that as a drag on their earnings and their revenue. It's a stagnant business that they didn't really want anymore. So they're kind of splitting this off. Regular IBM has about $77 billion in revenue. And I said again, this one has about $19 billion for the section that they want to split off. Shares of the parent company, though, were actually up 6% on the news. So if you look at this, is this a good thing or a bad thing? And that's for you to decide. But some of the ones in the past, you had Dow Chemical that split off. They had part of their business unit split off. You had eBay and PayPal. They separated their units, and I think both of those were doing all right. So it's interesting to see that the CEOs, a lot of them right now are really streamlining their businesses and splitting off the areas that are not kind of going with their core vision so that they can really focus on what they can do best, which usually is what you want to hear about a company. So that does it for the business news this week. Thank you for watching, everyone. Tune in next week, and I'll give you the business breakdown of everything that happens next week as well. Enjoy.